Hey guys, welcome into the video. So in this video, I'm going to be talking about lotto plays, what a lotto play is, my strategies behind it, and if it's even worth it with a small account, medium account, big account, and what your position sizing should be if you're going into a lotto play. So let's start talking about what a lotto play is. So a lotto play is an option that you buy that is super risky, that has a pretty good chance of going to zero, but also has the potential to multiply gains. It could go up 3, 4, 500%. So it's just overall super risky. You're taking a huge risk when playing lottos. You should have a very small section of your account in this. But first, let's talk about some strategies that I use and lotto plays that I use, and also some past lotto plays that I played this month, and just how my thought process behind it, how they turned out, and everything like that. And also two that I'm looking at right now that I actually played on Friday. So without further ado, let's get into it. So whenever I'm looking into one of these plays, I want to see upside of 200% plus, and downside is going to be unlimited no matter which play you do if you're in one of these lotto plays. Now you can always have risk management, have your cut loss level to just cut loss on these plays that are super risky, which is what I always incorporate if they don't hit, if it doesn't go the way that I want it to. Cut losses immediately just because it does have a pretty good chance of going to zero if your thesis does not play out on these plays. So before we talk about my personal strategies that I use, let's talk about a strategy that I stay far away from. This is playing earnings with options. So some people play lottos with earnings. Me personally, I will never hold a short-term option through an earnings call, reason because of the IV crush. This is when implied volatility is super high going to earnings because the stock could move up $5, down $5 very, very quickly the next day. It could make a big move either way, and investors and traders are already pricing this move in. Now, after earnings, let's say the stock stays flat after earnings, the option will drop in a big way just because the implied volatility will go down, and implied volatility is what makes option prices so expensive with some of them and so low with some others. So in my personal opinion, holding short-term options through an earnings call, no matter how bullish you are on earnings, I'd rather just hold regular shares of stock just because it is not worth the risk reward at all in my personal opinion. So when trading these super risky option lotto plays, I will always, no matter what, stay under 2% of my portfolio just because you have the potential to lose everything, and never put money in one of these risky option plays that you're not willing to lose. So if you're putting $500 of your money in one of these super risky plays, if you're not comfortable and prepared to lose that whole $500, I recommend you stay far away from even thinking about doing it. Now, it does all depend on your risk tolerance. Personally, my risk tolerance is super high. I do make some very, very risky trades sometimes. For the normal person, I would definitely recommend under 1% of your portfolio in one of these risky option plays. No matter big, small, medium accounts, that's what I would recommend. Just a very small percentage of your trading account. So the three strategies that I use in playing these lotto plays is, let's talk about the first one. So the first one is finding an option with very low implied volatility, making the option price cheap, buying an out of the money option. We'll go over this in just a second, an example and actually a lotto play that I bought this Friday. So you find a super cheap option. This is most likely with a stock with very low implied volatility. You do a little bit out of the money, not too far out of the money. I'll show you guys an example of this in a little bit, but you find this cheap option and you find the technical setup behind it, and if you do get that breakout, you could multiply your gains 500% plus. So the second strategy that I use is finding a news catalyst that I like the value of the option for, and the implied volatility is a little bit lower than I think that it should be. So for example, I made a play like this on the election. I found a solar stock that was beat down, and I knew if Biden won the election, the solar stock would go crazy, and I personally thought that Joe Biden would have a 60 to 70% chance of winning this election. So this would make this lotto having a 60 to 70% chance of being successful, and I thought that I would have 200% plus gains if Biden was to win this election, and if he lost, I would not lose everything, but it may go down 50%. So I was prepared to lose half of that money, and I would cut losses immediately if Trump was to win, but I did think that the probability was in Joe Biden's favor to win. The risk reward is in my favor for the option, so it's worth the risk reward to play this super risky option, hold through the election, and see what happens. That's what I did, and I'll show you guys that exact trade in just a little bit. So the final lotto play strategy that I use is finding a gap in a chart where I think the stock has the potential to move 10 to 20% in just a couple of days time, where the lotto play could hit and you make some crazy gains off of that. And I'll show you guys a chart for a perfect example of this that I'm going to trade on Friday in just a little bit. But first, let's take a look at the lotto trades that I made in the past couple of weeks, how they turned out, and just I'm very selective when I play these super risky plays because I know they do have the potential to go to zero very quickly. So I do want to find the best risk reward, and if I don't think it's worth it, I won't even think about getting in. I gotta find one where I think the risk reward is 4-to-1 ratio, so I think the reward is 4 times more than the risk. So let's take a look at my past trades. So the lotto play that I played on the election was Solar Edge Technologies, ticker symbol SEDG. So the day before the election, SolarEdge came out with earnings and the stock proceeded to drop about 25% down to the $200 range. Now I saw this and I knew that the election was the next day, and I knew the solar stocks was to pop if Joe Biden was to win. So I saw this stock hold the $200 support, and I bought some call options on SolarEdge just because I thought the risk reward was worth it, as I thought Joe Biden did have this slight advantage to winning the election, and my price target if Joe Biden was to win was this stock going back to $250. So Joe Biden proceeded to win the election. This stock ran up from its lows. It hit the $250 mark. I took profits right when this stock was around $235, and my call options were up over 200%. So I knew that if Joe Biden lost, the stock would most likely go back down to the 190, 180 range, and the option would most likely go down 50% or so. Now my break-even price for these options were $215, and if the stock hit my price target of $250 per share if Joe Biden was to win, I knew my options would be up right around 400%. So 400% gain compared to the 50% loss. I could lose half of it overnight, but I could multiply my initial investment by 4x if this probability was in my favor. So I took the 70% chance that Biden was to win. I compared it with a risk-reward ratio of this option where I thought it was a 4-to-1 ratio. So I thought this was worth the risk-reward even though it is super risky to get into. And it proceeded to pay off. Those options, like I was saying, was up over 200%. Took profits a little bit early, but it was a very successful overall trade and definitely worth the risk. So the most recent Lotto trade that I made was actually with NIO stock, ticker symbol NIO. So I saw the stock getting super extended, and I know from experience watching stocks like this chart reminded me of Tesla on its run to $540. So on Friday, I bought some put options just because in my personal experience, I've seen every time a stock gets so overextended like this, now it could have a big pullback, which did happen, but the reason for this pullback was because of a short report came out. So a short seller by the name of Citron Research put out a short report pretty much saying that he had a price target of NIO for $25. Now I bought put options before this report came out just because I knew there was a pretty good sized chance that a short report would come out. I knew that the stock was overextended, and I knew that they had earnings on Tuesday, and I just thought the valuation was too high for it to hold $50 plus. So I bought put options on NIO on Friday when I saw the stock was up 10%. Once again, the stock was just on a crazy run, up over 130% in just the past month. And then the short seller report proceeded to come out and went up from 10% in a day down to 10% in a day, so 20% move. My put options were up 70%, took profits, but my initial thesis behind it was a high risk, high reward play, and I was planning on swinging it over the weekend into earnings just because I thought it was overextended. And after earnings, once people realized that the valuation just is not reasonable, the stock would dump. So that was my thesis behind it. It did pay off. Now, not everything's gonna work out perfectly with timing, with the short seller report coming out and everything, but I did think anyways the stock was overextended. I don't play put options unless the risk reward is heavily in my favor, but it was in the scenario. I did like the risk reward going to next week, and those risky options did play off, up over 70%. So Lotto play that I got into on Friday, this is the first strategy that I was talking about. This is with Consolidated Edison, ticker symbol ED. So with this stock, I found the technical setup of having a reverse head and shoulders, which is usually a breakout setup, a very bullish setup. So as you can see right here, it has the 3 bottoms, and it is on the uptrend looking to break this trend line, and if it does, I think it takes off. So looking at the options that I bought November 27th, 83.50 calls. So look at this implied volatility, 16.47%. That is super low implied volatility. So the premium that I paid for this was 40 cents per contract. So what the delta means specifically is every $1 up the stock price moves, this option will go up 24 cents, which is over a 50% gain from where I bought the option. So this 40-cent investment would turn into 64 cents per contract, so $40 to $64 per contract if it moves $1. Now if it moved $1 down, that would also do the reverse, so this 40-cent contract would turn to a 16-cent contract. But the technical setup is there. I went out of the money to reach the full upside. Let's just say a scenario that this stock does break out of the trend line, which I do think has a pretty good chance of happening with this technical setup. This stock would probably get to $86, $87 around there, and because I paid 40 cents for this option, my break-even price would be ED getting to $83.90. Now every 40-cent increment after that, so let's say it goes up to $84.30 per share. This option would be up 200%. Let's say it gets up to $84.50. This option would be up 300%. So let's say ED pops up to $85. This option would be up around 500%. So if it does break out of this technical setup, which I do think it has a high probability of happening, these options should go up around 500% if my thesis does pay off. Now this option is obviously very risky if the pattern does not play out, but in that scenario I would cut loss immediately, maybe be down about 50% or so. but 500% gain compared to 50% loss, I do like the risk reward, so I will take that any day of the week. So we'll see how this trade overall plays out, but just the cheap option, the low volatility with the technical setup, this is what I like to see for a lotto play like this. So one more high risk option lotto play that I got into this Friday is overstock. Ticker symbol OSTK. This is the number 3 strategy with the big gap up. So taking a look at overstock's chart, we can see that it's on a huge downtrend, down over 50% in the past couple months, as it hit highs at 128, and right now it's sitting right at around $54. So taking a look at these resistance lines, if it breaks $56, I think it runs to $60. If it breaks $60, it has a huge gap up to $65, which is what I'm looking for in this trade. So taking a look at the call option that I bought next week expiry for November 20th. The implied volatility is pretty high. The option itself is pretty expensive because of this. But if the scenario plays out where I think it runs up to $65, the option will be up around 500%. So the breakout has to happen soon for this option to pay off. As we can see, the theta, which means every day that passes, the option will lose 16 cents. So that is essentially losing $16 per option contract every day that goes by if the stock does not move. Also, every dollar that the option goes up, looking at the delta, the option will increase by 25 cents, which is $25 per day. But I am playing the breakout up to $65, which may or may not happen this week. So this option is very risky just because I did get such an early expiry of next week on this. So this is one that I'll either cut losses for or let it ride out if it does start that breakout. So I could be cutting losses on this on Monday or Tuesday, but if it does hit that breakout, I do think it runs up to $65 very quickly, and the option will be up around 500%. Now for lower risk, for a lower value account, I would definitely go with later expiry, November 27th or December 4th would be much better expiries for lower risk, but a lotto play is just you accepting that high risk for that high reward. But I am looking for that breakout. I do know where I would cut my loss if it does not play out. I would cut losses very quickly. So the risk reward, about a 50% loss compared to a 500% gain. Now the early expiry does make this more risky, but it does give you more reward potential. So I am willing to risk it for the huge gap up potential. So those are just a couple of examples of some strategies that I use. Now, are lotto plays worth it? About 50% of the time, these trades will not pay off. But as long as you have that risk reward ratio of at least 1 to 4, I do think lotto plays are worth it. As long as you risk manage, as long as you know where you're going to stop your loss, and as long as you have a thesis behind it and a plan, I do think lotto plays can be very beneficial as long as you know what you're doing. But make sure to go in with small amounts. It's never worth it to risk half your portfolio and one 50-50 play that could go either way. You could lose a crazy amount in one single trade. And always be very, very selective with these option lotto plays. So I like to think of these lotto plays as if you're going to Vegas. In reality, if you're going to Vegas, you have about a 45% chance of doubling your money and a 55% chance of losing everything. Now with these option lotto plays, as long as you have the correct thesis behind it, and I like to think with these option lotto plays, you're going to Vegas, you have a 50% chance of losing everything, but you also have a 50% chance of quadrupling your money. So treat these option plays like you're going to Vegas in a casino, except you do know that you have a better risk reward ratio, so that's why I like to use these as the high risk plays. So anyways guys, I hope you enjoyed the video. If you're interested in joining the private stock group, that link is down below. Every time I buy and sell a stock, I send an alert. I answer any questions you have, and you get to talk with the community as a whole and just throw your ideas out there and anything like that. If you want to get 3 free stocks on Webull, that promotion does end soon. I highly recommend you get that. That is an affiliate link, so it does help support the channel. If you want to get 5 free dollars on Acorn investing, 10 free dollars on Coinbase, you can't go wrong with free money. And yeah, if you haven't subscribed already, please subscribe. I would greatly appreciate it. Like the video. And thanks so much, guys. Let's get rich.